All right, welcome back everyone to the 5ers Live Trading Room. It's Wednesday. It's going to be the last live stream of the week, and I think it's also going to be the best live stream of the week because I got some really interesting stuff I'm going to be talking about today. But as you can see, there's no Victor here, not in the room and not next to me on the screen as well. Victor has a day off, so it's only going to be me today, but rest assured, I have a very good schedule for you guys here today. And as you've seen in the description of this live stream, I do have the secret giveaway code. The word is actually written in the description this time. What I'm going to do today with the giveaways is I'm going to give away one account to one person 3 times during the course of this live stream. So stay tuned. Make sure you sign up. We're gonna do one giveaway after each of these sections that I'm going through today. So the whole idea for today's live stream is inspired by a question that we had on yesterday's live stream. Maybe not a question, but a comment where basically this person said that he's been trading for a very long time and he still doesn't have a trading system, okay? So what I want to do is I want to make sure that I give you guys something here that you can start working on. Ideas. I'm going to break down my trading system. I'm going to show you my approach. So you can either just copy that straight away or take bits and pieces of that and start working on your own idea. And after that, I'll be looking at other systems that I've been trading in the past and other systems that I know from experience and give you some ideas on what you might want to be doing with that as well. And the goal with today's live stream is to give you something to work on. So, I'm not going to be able to give you a fully, a full-fledged system here because the system that I'm trading has been developed by me based on other people's work. And that's what you have to do as well. You have to look at what other people are doing, take bits and pieces of that you think makes sense, and then build your system based on that, basically. Okay, so what we're going to do first here is we're going to be doing a quick little live market scan session. I'm going to go through the markets and I'm going to be showing you what I'm watching in the markets right now. And that's going to be taking maybe 15 minutes or so. And after that, we're going to go straight into the first giveaway account about 20 minutes into the live stream or so. And then after that, I'll show you my system. Okay. So after the first giveaway, I'll show you my system. I'm probably going to take like 3 breaks during this live stream, maybe 3 2-minute breaks just to, move around, maybe get some water because I'm going to be talking for 90 minutes straight here. So I gotta, we get to take care of ourselves, right? I'm not in frame. Why am I not in frame? I gotta make sure that I'm actually standing. Man, this is so tight without Victor here. What happens if I move to this one? That better? Well, I think for this particular live stream, I'm actually gonna do it like this with this structure because I do think it's better. Okay. We got CPI in 27 minutes, 26 minutes. We're not going to be talking about, we're not going to be trading much today. We're going to be doing more of a educational webinar here with the educational live stream where I show you how to trade. So just a quick market scan here to show you guys what I'm watching today. So I've just taken a trade on NCD CAD, and I think this is a great opportunity to break down this trade right here. So I want you guys to look at the screen here, okay? Look at price action. Just take a moment and think about what you're watching here. What type of patterns, what stands out here? And if you are experienced, if you're an experienced trader and you know technical analysis, then I think what you're watching and what you're paying close attention to is this structure right here. And maybe exactly this is what Mark is saying right here. It's started to make lower lows and lower highs. Yes, and exactly what Henry is saying here. We do have a head and shoulder pattern. Like I don't really care about naming it the head and shoulders, but it is what it is. This could be, in theory, a head and shoulders. But what I want to be looking at is basically the market structure shift that we're seeing right here. What we do have here on NCD CAD is a low, a high, higher low, higher high, and then we have a low structure right here, which is equal to that one. So we have equal lows. Now this, of course, creates the neckline of the head and shoulders pattern. We come up, we create a lower high, we break the neckline of the head and shoulders pattern, which I've also marked out as a support area right here. And then the way I like to trade this is to wait for the retest of that broken level. Now this is, yes, exactly, just a change of character. I think ICT is using talks about change of character. I just want to, I simply just talk about, so a change of character is actually something different for me. A change of character is when I talk about a change of characteristics of a trend. Okay, so what we're seeing here is a trend shift or a market structure break or a market structure shift, simply a, you could call it a supply and demand, or horizontal support and resistance flip as well. It's an SR flip. When I talk about a change of behavior or a change of character, what I mean is you have an uptrend like this, and the characteristics of this uptrend is somewhat the same. The up moves are equal in length. The retraces is equal in length, but then you might have something where you see this. So looking at this uptrend here, for example, you have the same characteristics from here to here, but now the up moves is starting to get smaller and the down moves are starting to get more compressed. And this is a change of character. It's a change of characteristics of the trend. And usually what I see, what I think when I see something like that is something is about to happen. And especially if it happens close to a high time frame resistance, then I know that price is slowing down to, going into that resistance zone and slowing down. But that's a bit too advanced for today's webinar, but just to make sure you understand that there's a lot of different Victor is in the comments right here saying he sees a quasi. The thing with Victor though is it's the quasis all over the place. I think it doesn't matter what it is. Could call it a head and shoulders, could call it a quasi. It doesn't really matter what it is, but what matters to me is there's a shift in market structure. Now there's different ways to find shifts in market structure, and here obviously some people look at head and shoulders, some people look at quasis, but what we look at is market structure. So breaking down this trade right here, one important thing that I want to mention, the reason why I found this trade is because of this signal right here. So the indicator, the RLZ slingshot indicator, I use this to, all the alerts that you see here on the chart are automated. So I get this to my, oh, we got Dill right here. What's up, man? I've just interviewed this person on just before the earlier today, had a traders interview with him. Awesome to have you in the chat here. So yeah, I set up these alerts. I get automated signals to my Discord, and I pull them up on phone so I can look at them. So just to give you an idea of how I found this trade. So I get the signal, I look at this and I say, it looks pretty interesting. What I want to do then is I zoom out. I look at the daily, because I always want to make sure that I'm trading based on high time frame key levels. And what we see here on the daily is that it's definitely a key level. It's been used as resistance and support quite a lot for a fairly long time, pretty much all throughout this year. So what we see here is SR flip. This is where you form the break of market structure on the 4-hour, a nice rounded top, and then you break this level to the downside and you close a daily candle below, and also a daily candle right here indicating that you do have a confirmed break to the downside. And that's when we do go into the we got some questions about the indicator. For obvious reason, I'm not able to speak about the indicator because it's actually my indicator, it's a paid indicator, but I don't I'm not gonna, advertise this on this live stream, obviously for obvious reasons. But it's my indicator. It's an indicator that I developed for myself to help me improve with my trading and um, give me signals. But enough of that. I go into the 4 hour and I see that we do have a break and retest of this 4 hour level right here. And here is where my whole system, this is what my whole system is based on. Okay. I look for I look to trade key levels. Okay, so I mark out the key levels, and in this case, it's a daily level here. You can also see that it's well visible on the weekly time frame. So how would I have planned this trade? Well, we can look at this as an example. I could be doing my weekly market scanning. So that's what I do, right? Every Sunday, I go through a list of, I think it's 40 pair. So it's this list right here. I go through this list every Sunday, and I divide them up into three different categories. I have priority, interesting, and not interesting. Priority is where I actually see a trade setup forming in the next couple of hours or the next couple of days, basically next trading week, which I view as my trading session, because I'm a swing trader and I view my whole week as one trading session, because I only really trade somewhere between 15 minutes and 30 minutes a day. So I combine that and make it a whole week as my trading session. And therefore, I only do one journal review on the weekends because it's just not a lot of information on each day. So I trade these plans and nothing else. So looking at the weekend, I would say that, okay, what is my plan here? Well, my plan would be to short this level until there's an SR flip. If there's an SR flip, I'm simply looking to go long on the break and retest. Why am I looking to go short? Well, because it's simply a break and retest of a key level. Let's look at the daily. We can see that we don't really have any good confirmation for a short here. Well, actually we do. So I would actually probably have shorted that 4 hour candle close. Now this happens 7 a.m. in the morning. So if I did have if I were lucky, I would probably catch that. But this would have been my trade. I'm entering and then I'm looking for a profit target of 0.53. Why 53? Well, because that 0.03 is the commissions of the trade. So I'm looking for a 0.5R profit target. And then this would have been okay, I would have been stopped out on that one, just to show you that obviously there's going to be losing trades with this strategy as well. But you do see that it almost came down and hit that level down there. But it is what it is. This is trading. So now we've reclaimed that level as support. We're trading higher, and now I'm simply looking at this and saying, what if we can go long now? So we're now at that key level. We had a break and retest of that key level. What if I can go long? So we go into the 4 hour and we try to see if maybe we'll find a bullish engulfing candle on the 4 hour, and that's what we have right here. So I'm going to be marking. I don't know what liquidity, like words like liquidity grab. I don't care about that. Like I don't like. Yeah, it doesn't matter to me at all. What I care about is just this very simple price hits the key level. Do I see a break of structure? Do I see a 4 hour bullish engulfing or not? And then I enter. I'm looking to capitalize on the very first initial move that we see on this level. Here, I would enter on the 4 hour candle close right here. I would put my stop loss below the level, and I'm not looking left for a low, and I have a low right here. I would again be looking for 0.53 R profit on that one right there. And there we go. Another stop out on that one. I haven't checked this before going live. So as you can see, could have gone better for this live stream right here. But the interesting part about this is the trade that I actually took, okay? So now we have that key level. We reclaimed it as support. We have support once again. And what happens here is important. Now we break that level to the downside. We close a daily candle below, indicating that we now have a breakout. Come up and test that level right there. And now I would be looking at the 4 hour. Okay, so what is my, because this looks just perfect. So what is my confirmation of this trade right here? Well, the confirmation here would be a 4 hour bearish engulfing candle. And you can look at the difference between the trades that we did take here. So I think this rejection of the level is quite clean. I think that's a good trade. That's an interesting trade. But if you look at that one, you need that second trade that I took based on that 4 hour bullish candle. It's not really a great trade because you've already used this level as support multiple times in the past. What you want to do is you want to make sure that you go in on the first retest after a break. So you can see right here, we got rejection, we got stopped out. That's actually the first reclaim of this level as support. But I don't think we had a daily close above, so it's not really a daily breakout. But I think you get what I'm saying. Now, if you compare these tests, I think what we have here is a very, very nice, clean, rounded retest. And what do I mean by a clean, rounded retest? What I mean is you have the breakdown candle, the candle that breaks the level, also known as the thrust candle. And you'll see that a lot of the words I'm using is from Trader Dante, Tom Dante, as you might know. Some of you probably know. Like thrust candle, last high pre-breakout, last low pre-break, and things like that. It's not words that I've come up with. I don't think I actually have anything original here. It's just all of this is taken from different people combined into one system. Like, I mean, technical analysis has already kind of like been fully invented, so we don't have to create anything completely new. So if you look at that thrust candle and that candle that breaks lower, you want to be looking at where is the last low pre-break, okay? And I think it's that one right there. So this is your first idea that I want you to start thinking about, okay? This is a pattern and a structure that will show itself in the markets, and pretty much all tradable markets out there, is when you have a level like this and you have a candle that breaks through the level, and you could also include these wicks right here and maybe that level. You see that is a thrust candle because it goes through the whole level. It starts at the up here, goes through the whole level in one move, and then closes well below the level. That's a strong thrust candle breaking through a level. Now, what this creates is also levels called naked levels. And again, from Trader Dante. What is a naked level? Well, a naked level is a level that has not been retested. If you want to be really if you want to be really detailed about this, you want to go into the lower time frames to see if this really is a naked level on the lower time frames as well. But as you can see right here, this level has not had any immediate retest before closing down here. Let's go into the 1 hour. There's no 1 hour retest of that level right here, but on the 1 hour, the last low pre-break is actually that one. But we're going to be sticking with the 4 hour because that's the time frame I'm mainly trading. Going into the 15-minute, we see again there's untested level right here. It's a naked level right here on the 15-minute as well. Let's go on down into the 5-minute. Well, what do you see? Well, a naked level on the 5-minute as well. What do you see on the 1 minute? Well, on the 1 minute, it's not really a naked level, but doesn't really matter. Like, does it really matter if you're trading on 4 hour? Not really. I usually never go lower than the 1 hour, but that's an idea that you could go with, and then you can test that. What's the probability? You could ask yourself, what's the probability of the first retest after a breakdown? What's the probability of price reacting strongly to the first retest of a naked level if it's also a naked level on the 1 hour and the 15-minute, for example? And these are the things you have to ask yourself to be able to develop your own edge, okay? Because there might be edge in actually saying, well, if it's a naked level on the 4 hour And the 1 hour and the 15 minute, it has a 70% chance of giving me a rejection. But if it's only a naked level on the 4 hour, that is only 30% or 30% chance of giving me a rejection. So now you should be only trading that naked level if it's also a naked level on lower time frames as well. And these are the things you have to ask yourself. And now you're thinking, well, that sounds complicated. Yes. And so is becoming a lawyer and a doctor and a trader. It's complicated. It's difficult. It's not easy. And it's not supposed to be easy. If you came here and you thought that I'm going to give you something and it's going to be quick, easy money, well, then this is the wrong live stream for you. But if you came here and you are ready to act as a professional and you're ready to come up with ideas and test them and create a system based on these ideas, then welcome. This is the perfect live stream for you. Okay, so now we have a naked level that's also a naked level all the way down to the 5 minute time frame. How do we want to trade this? Well, we know that it's a naked level, and I like to look at these levels as sort of a magnet. You think about these as a magnet, and you think that price is going to be being dragged up to that level. So what if you put your entry on that level? Okay, so we know that that's our entry area. Okay, where do we want to put our stop loss? Well, I think you want to put your stop loss. Three things or three ideas that I want you to think about. Number one, put your stop loss above the high time frame key level. Okay, and this right here is the high time frame key level right here. This is the high time frame key level. That's the blue area. That's idea number one. Okay, and now you can also think about alternative number two. That is above the last swing pre-break, which is that one right there. You can see that that's a swing high or swing point pre-break. You see, that's a rejection, boom, straight down. And the third alternative is going 2 swing points back. So if you're, for example, if you're trading, let's say the daily, then sometimes you might want to make sure that you're getting your entry on the 4 hours. So you can have a daily trading style, but you're looking at the 4 hour for your entry trigger, and then in that case you might have longer more time, and you're okay with giving the trade more room for error, so you might want to be using that one right there. For this particular trade, I'm going to be looking at having my stop loss on the last swing point. And Henry says something important here as well. You can also be adding the monthly open and the weekly open. I think those are also two indicators or two levels that you might want to be looking at. So the weekly open is basically where the weekly candle open, and then the monthly where the monthly candle open. Those are a lot of times also very, very good area to base your stop loss on. But for this particular setup, let's just talk about this. Okay, so now where do you want to TP? Well, I think the best thing to do is just TP at the FTA, the first trouble area. What is the FTA? What is the first trouble area? It's basically where you think price is going to run into trouble. And for this trade right here, I'm just going to put it right here, okay? Right on these highs. What type of R are we getting here? What type of risk to reward? We're getting right below 1. Now, of course, you got to try this out. You're going to look at your win rate when you're trading, and then base your average R per trade based on the win rate of the system that you're trading. But now let's take a closer look at this. Let's take a closer look and see how or if price is reacting to that naked level. The price comes up, hits that naked level, you would now have been filled. As you can see, it's a fairly good reaction right here, but then price moves slightly higher, but then it moves start moving lower. Now that's one idea that you could be looking at. I'm not really using this approach in my own trading. But that's an idea that I want you guys to try out. Mark out the naked levels after a break. Look at where you want to have a stop loss placed. That's one idea. Now, the way I trade this is just simplicity. Okay, just complete simplicity. This is the trade I took, and let me show you why I took this trade. Because of this. Okay, this is why I took the trade. That candle right there. Because what does this tell us? This tells us that we have a rejection of this level. We have, not only do we have one 4-hour bearish engulfing candle, but we have another 4-hour candle closing below the level, really confirming the price wants to move lower. So I put actually a market entered when this candle, as you can see right here, when this candle right here hit this entry point. I saw this in the morning, and I'm like, okay, the setup is already confirmed. I would have been in this trade already if I saw it earlier. So I'm just going to market enter here. I'm putting stops above the key level, and then I'm looking for a 0. In this case, a 0.55 R trade, and it went straight to my TP. Now, if you're the type of trader that are looking for more of a high and bigger targets, this is a really good entry strategy for swing trading as well. But you're going to have much lower win rate, but then your risk to reward is going to be much higher. So basically, what you have to ask yourself: do I want high win rate but lower risk to reward setups, or do I want lower win rate and higher risk to reward setups? For me personally, I thought that I wanted to have low win rate and high risk to reward, because I'd like to see myself as a fairly patient person, and I can let my trades run. But then I switched it. I asked myself, what if I just take profits almost immediately? And that turned into a high win rate system with low risk to reward. And that has changed the game completely for me. So it's all about finding your particular trading style that works for you, and then start working on that. But if you look at this, I mean, you could easily put your TP down here, for a 3, 4, maybe even 5 R trade, because you have a clear rejection and a break of structure on the daily, so it kind of makes sense to see a move lower. Now, where did I put that one? It's 55. To see where I had my actual. Go into Discord here and see what actual take profit of that one was. Right here. Okay, so that's basically my way of trading. I can show you another trade I took on Bitcoin. That's not the same. Yeah, but it's a trade I took on Bitcoin. I've also marked out a naked level right here. Yeah, exactly. Victor's probably in here with a 30 odd trade. I know he's in EU though. Okay, so you think swing trading, focusing on larger time frame is safer? It's not about that, man. It's not about being. Well, I would think that swing trading is safer, but if you're not a good swing trader, then it's not safe at all. There are very good scalpers out there. There are very good day traders out there, and there are very good swing traders out there. A lot of swing traders are really bad day traders. A lot of day traders are really bad swing traders. It's not about what's best. It's about what you're supposed to be doing. Okay. You have limitations, and your personality dictates those weaknesses, So you have to understand what are your strengths and what are your weaknesses. And then you have to find ways of combating the weaknesses with your strength, okay? If, for example, you see that you are not very patient, you have a tendency of exiting your winners too quickly, too early, and you see that if you hold the trade for over a day, you start making mistakes. Well, then maybe look at what happens if I just start exiting early, if I start taking profits early and adjust my stop loss to make sure that there's a lot of things you can do to kind of like try to create systems around the type of person that you are. Let's look at this Bitcoin trade right here, and then you know what? This question right here. So I also have ADD, and I'm actually right now. It's funny. I'm actually working on I'm writing a book right now about ADD and ADHD in trading. Now, I'm gonna be honest with you guys. I got ADD. I'm probably never gonna finish. I'm never gonna finish that book. But it's pretty cool to say that I'm actually working on it, working on a book. I'm about halfway there. But yeah, it's so let's talk about that for a minute. What type of ADD is attention deficit disorder? It's basically I'm half retarded. No, I'm kidding. Not really. It's ADHD without the hyper. So I'm just not as fun as someone with ADHD, I guess. So what type of issues do I have based on that? Well, I can be impulsive, you know, impulsive, and that's really, 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 really dangerous. So what I have to make sure to do is um, I have to really make sure that I'm not over trading, and I need to make sure that I really think about the trade I'm supposed to be taking before I take it. Um, so yeah, I think that's one of my biggest issues is sometimes I'm very quick in jumping into a trade without really taking a step back and thinking about it because of the impulsive nature of my personality. But we all have different personalities. We all have different personalities with strengths and weaknesses, and it's your job as a trader to pinpoint your weaknesses, pinpoint your strength, and combine a process for um, combating that. Okay, so the trade I took on Bitcoin is this one right here. On the daily, we see that the Bitcoin came down and hit high time frame support. It hit high time frame support right here. I've marked out this level as a blue level. Price came down, it hit it, daily closed with a wick. I went down into the 4 hour and I started looking at this and thinking, we have somewhat of a decent structure right here. Kind of looks like this, right? So I decided to just get right in, market enter right here, put stops below these lows, and then a 0.5 hour. Simple. That's it. I look at high time frame key levels. If we have a reaction at that key level, I want to get in and make sure that I capitalize on that first very initial move. All right. I hope you guys are ready for the giveaway. I hope you're signed up for the giveaway. I'm going to be doing the first giveaway here in just a couple of minutes. Let me open everything up here. What what day is it today? Seems like I don't have it's the 11th. And I'm going to be let's see how many people do we actually have in here. Right, so we do have a few people. Now remember guys, you sign up in the description, okay? So we don't have a lot of people in here, which the code is already out. It's 5ers Lives. It's 5ERS Live. I'm gonna write it in the comments as well. Today we're not doing the secret thing. It's in the description. The code is in the description. So what I'm gonna do now is I'm gonna give you guys 2 minutes, okay? 2 minutes to go sign up for the giveaway and use that code, and then we'll do the draw. The less people signing up means higher chance for you to actually win if you do sign up. So this is going to be the first one, and then we'll do 2 more over the course of the live stream. Let's see. This first hour is about giving you some ideas on how to trade and what to trade, and then we are going to look at my trading journal. I'm going to break it down, and I'm going to go into some of the trades that I've taken. We're going to look at some statistics. I'm going to show you how to actually journal your trades, and we're going to look at my data and my statistics and see if we can find any ways to improve my system based on the journal that we have. And guys, I promise you, it's you all need a trading journal. Like, I even have a student in my community, and if you're watching now, I love you, but you kind of have to start journaling, because he's like, journaling is not for me. Well, I don't care. I don't care. If journaling is not for you, then trading is not for you. You need to get a journal. The journal that I do recommend is Wonk. I do think we have a discount for that one. You could probably search for The5ers Wonk on YouTube, and you'll find the previous live stream on that one. And there's going to be a code in there. If you really want to become a professional trader, get a journal, make notes, start asking yourself, why are you making mistakes and how can you fix those mistakes? Because like we talked about yesterday with Victor, you don't want to be wasting time. You don't want to be that person that finds yourself in a situation 5 years later with no progress, and you've just wasted 5 years of your life. Okay. And that's why I'm here. That's why Victor is, me and Victor, we're doing these giveaways. It's, we're here because we know what it takes to go full-time trading. We know what it takes to be a professional trader. So if you take our advice, you might actually get there. But if you just take some of our advice and you ignore journaling, it's not going to happen. All right. Let's do the giveaway. All right, we got a few more people in here. Perfect. Let's switch over to the actual. Let's go over to the actual giveaway. Okay, let's do this. Yeah, today we're going to do 3 of these. We're going to do three giveaways today. And guys, like the live stream. Come on, guys, like the live stream. Yeah, Reg, we're going to be doing, this is the first one, then we're doing 2 more. You know what? I'm not gonna do the giveaway unless you actually like the live stream. So press that giveaway, press that like. And if we get to 1,000 likes, I'm gonna start dancing. And I'm really, really terrible at dancing. So we're not gonna get to 1,000 likes. Please do not get to 1,000 likes. Okay, let's go. Draw winners. 1. That's it. There we go. That's the first one. That's the first one right there. I'm gonna screenshot this one. Make sure that we have that one. I'm gonna save that. All right. Now, let's see. Where do we have trading view? Right here. Well, so that's the first giveaway. We have right here. That's the winner, Mayank P. Probably pronounced way differently. Right. Okay. So any more ideas on what you can develop a system based on? Okay, so you have a simple range trading. It's you can I like to go to Euro NCD. I think Euro NCD has a really beautiful. I love Euro NCD. It's this beautiful market structure altogether. Let's see if we can find a range here, and then we're just gonna use the replay function. Yeah, okay. So this is the range right here. We know that from. So this is the range. Okay, so I'm just gonna put the replay tool here. I don't really know exactly where. I don't really know exactly where the range is forming, but what I'm gonna do here is I'm gonna start marking out some levels here, and then I'm gonna show you, how can you trade a range like this one with very, very simple entry triggers, like just a bullish or bearish engulfing candle. Okay. How many assets do I look at? Let me take a look here. How many do I actually look at? I look at that one. I look at 40 different pairs, and I scan them um, every Sunday. But the thing is, it only takes me, like last time, it took me 9 minutes. Okay, so 9 minutes going through 40 different pairs. This tells me, or this should tell me that, or this should tell you that I have a I have a system, I have a routine um, that I've been building throughout the years. But I know exactly what I'm looking for, and I'm scanning it on a daily. It's very, very simple. I'm just adding the level I want to be trading at, and if it makes no sense, that I'm just not going to be trading it. So what I'm seeing here is I'm seeing a resistance starting to form here. Let's see if we can form a range here. If we can go lower, um, maybe this was the actual range. Let me go back and see what the actual range was. Yeah, okay, so it's going to be that one. Okay. That's a really tight range. I want something that's a little bit bigger. You know, sometimes you see, you know, trading educator that they're just going to put a couple of lines on the chart, and then they're going to use different drawings in trading view to show you how you're supposed to be trading. But ask them to use the replay function, okay? Because if they're not able to execute this even in replay, then they have no idea what the hell they're talking about. So what I usually do is I try to find the range. And I'm not looking at the chart now. I'm looking at the actual comments here, because I want to make sure that when I add the replay function on here, I don't really want to be knowing exactly when price is hitting support and resistance. So give you guys a more of a realistic approach to this. Okay, so I know it's a range. It's definitely hindsight trading. It's a bit like cheating, you know, but still trying to keep it as realistic as possible. I would say that this is a decent support. So prices in this support, it's very simple. We're just going to be looking at the 1 hour here. And we're going to be taking trades based on bullish and bearish engulfing candles. If we have a bullish engulfing candle at support, we buy, and we buy on the close of that candle. We put stops either below the candle or below the level. Okay, and then we're just going to see is this profitable or not, you know. But it's definitely an idea that you can start working on. And let's see. Okay, that's a bullish engulfing candle right there at support. Below is below the level, so we're just going to put it right here. We're going to be using a 1-to-1 risk to reward ratio on this, 1-to-1, and I think it makes sense also because that's kind of like a FTA. And then what we're going to be doing is I'm going to be adding a window here, and this is our result in R. We're going to be doing a live experiment here. See, is this actually profitable? That's our first TP hit. Let's say 1R on that one. We're now in 1R profit. And what's happening here is we're hitting. I think I would like to put support resistance here. That's not a trade because it's not an engulfing candle. Things are getting a bit complicated here because now we're having a different structure of this whole range right here. Okay, so bullish engulfing candle is what we're looking at right here. I think we got one here. I think I want to put stop loss below the level. We're going to TP at 1R, which is kind of like here. That's 0.9. But I actually I want that to be the TP. That's TP, so that's 1.9. 1.9R in profit on this one. So now, basically what I'm doing here is I'm just adding levels. I'm just adding levels, and I'm looking for bullish or bearish engulfing candles at those levels to enter a trade. And then, this is what you need to be doing, right? You need to have an idea, and then you need to test that idea. So now we have two trades. We have a result of 1.9R. What if you get similar results over 200 trades over different markets? Then you have an idea of start developing your edge. So this becomes a bit tricky because we obviously have a level here, but we also have a level here. So what I'm going to do is I'm going to I'm going to be trading based on this level as well, because it's such an obvious level. Let's see. Yeah, that obviously that's the rejection. Are we coming back down to support? We are. Can we form a bullish engulfing? That's the bullish engulfing right there. That's exactly what we're looking for. Stops below the wick. 1R going to be right there. I'll get stopped out on that one. So we're minus 1R. So right now we're in 0.9R profit. With a wider stop loss, we would not have been taken out there. And then you continue doing this until the actual range has broken. We have a bearish engulfing candle right here. Going to be entering on that one. And then what you want to do is you want to make sure that you back test this to see if you have any sign of an edge. And then when you do see that you have a sign, like there's something here, then you do this again, but you enter everything into a trading journal and you start looking at the statistics of that trading journal. But that's what's going to help you optimize this trading system. So there we hit 1R. We're back at 1.9R. And then I'm just going to be taking one more trade to see if we can. That's actually none of that is an entry trigger, but that one is. So I would probably have entered right here. And now the stop loss needs to be below these previous wicks as well. And then we're going to be putting at 1R for that one as well. And then you see we hit that as well. So now we're at 2.9R. So we started trading this on the 23rd of April, and here is the 26th. So that's about 3 days. So in 3 days, 1, 2, 3, 4, 5 trades where 4 were winners and 1 is loser, and you're up 2.9R. That's not too bad. And what I've showed you here is a super simple approach where you're basically just looking at adding support and resistance. Whenever price hits resistance, you look for a bearish engulfing candle, you enter, like you can see here, you have an engulfing candle right here. It's kind of like an engulfing, could also have been an outside bar here, but you enter on the close of that candle, stops above the level or above the structure that created the level, and then you TP at 1R or 2R or whatever you think makes sense for your style of trading and your system. So that's another idea of a possible system that you can work on and try to refine. Again, this live stream today is for the people that do not have a trading system, because I see it so often, oh, I don't have a trading system, what should I do? Well, this is what you need to do. You need to come up with ideas and then you need to test them. Okay, the next idea, go into indicators, type in EXPO. That's right. And then you click this one, moving average exponential, because I'm going to be showing you how you can trade using a simple moving average. We're going to be changing that to 20. So this is now the 20 EMA. What do you think about negative risk reward? Well, I think negative risk reward can work very well. And I'm actually using a negative risk reward on my own trading system when I'm swing trading. So negative risk reward can be very, very useful if done in the right way. And it's actually something that I would recommend people play around with, because a lot of times people say, oh, well, it's you're supposed to have 2 or 3R unless if if you have lower than that, you're not going to be profitable. But that's not the way it works. You can be very, very profitable with a trading system using negative risk to reward as well. So next trading idea I want to give you is this. You add the 20 EMA. Oh, 250 pip stop loss is quite big. It depends on the setup. Sometimes sometimes my stop loss is 70 pips wide, sometimes 20. It all depends on the technicals and price action, basically. So, okay, so you want to be adding the basically, this is the same system like I showed you with range trading, but instead of using horizontal support and resistance, you're just using the 20 uh, any public track record for public track record of negative risk reward. Yes, I actually do have a public track record, but it's only 4 months. So, and the thing is that track record, I think I'm only up like 1% last 4 months, but that's because I've had some issues with my copy copy trader, and not all my trades have been copied to that live account, but I'm actually working on building a solid public track record on that one. I can show you though what the evaluation account that the trades are that all the trades are copied to, and one of my main accounts I'm trading right now, and that is a 100k boot camp elevation, because that was the elevation account I used when actually starting to experiment with this. So let me show you that, and that's this one right here. Let me add all of this to trading view. You'll also see that this is based on negative risk to reward. Okay, so here we have the actual graph of using. So basically, what I'm doing is I'm TPing at half an hour. Okay, and this is what we're looking at right now. And the equity graph is, I believe, looking very good, as it should be. And then if you look at the stats, you can see, and this is where the average, where the it's you see that the average loss is bigger than the average profit. Okay, so that's the negative risk to reward. The fact that my average loss, I'm losing more on average than I'm winning on the trades, but I'm winning over 70% of the time. And that's the whole idea with having a negative risk to reward ratio. You're never going to be profitable if you don't have high enough win rate. And I find through backtesting that this approach has about 72% 72% win rate in backtesting, and that's why it works. So negative risk reward is it works, definitely works, and I've seen a lot of profitable traders that are using a negative risk to reward approach. Okay, so what I want you guys to perhaps no, a month, it's not enough, not at all. What I showed you here, though, is not a month. The stats that I showed you here is from July the 10th. So it's actually 2 months. So it's 2 months, and the track record I'm building on my personal account based on this is 4 months, and that's at least a little bit profitable. And what made me change into negative risk to reward was testing. I tried it out. I was in a live stream with Rich, and also Victor talks a lot about negative risk to reward as well. So I talked with Rich as well when I was on a live stream with him, and he talked about how what approach he has with negative risk to reward. I'm like, I told him like I think that's, I told him that I don't think that's ever going to be profitable for me, but I had to try it because it did sound interesting. So I did try it, and I saw that if I would have exited all my trades at just half an hour instead of 2 or 3 hour, then I would be much more profitable. So that's what I did. I just followed the numbers. And then also, I do interview quite a lot of traders, funded traders at the 5ers. And what I've seen is a lot of the very profitable ones are actually using a negative risk to reward ratio. So that kind of opened my eyes to the possibility of this. Okay, so what you can do with a moving average is you can look at the moving average as a dynamic support and resistance. No, I do not use ICT or SMC. I trade price action, market structure price action. If price gets rejected at resistance, I sell. Simple as that. And it's all the same, I mean, the difference between the way I'm trading and SMC and ICT traders is just they use different names for the things I'm trading. I look at last low pre-break and maybe a naked level, and that would perhaps be a fair value gap. And then I look at the reload zone, and then for some reason ICT took the fib levels and just changed a couple of numbers, and he calls it the OTE. So it's the same thing with slight variations, but just different names. So I want you guys to think about that, because ICT and ISMC is very popular right now. But I want you to think about the fact that technical analysis is technical analysis. Is you can't really have too many variations of technical analysis. So you need to understand that don't get stuck in one way of trading and one way of thinking about the markets. About that whole talk about algorithm controlling everything, and it's like this magical algorithm being. Try to have an open mind and try different things, because I've seen a lot of traders out there, SMC, ICT traders, those who are profitable trading ICT and SMC, which I guess is pretty much the same thing. Those who are profitable doing that have personalized their approach. They've taken maybe a concept like the OTE or the fair value gap, and they created a structure in the system around that, something personalized to them. Exactly. Old method, different names. It's all the same. Technical analysis was invented in the late 1900s, right? In the Japanese rice markets, you had the advent of the Japanese candlestick chart that we're looking right here. Exactly, price and name changes, but price never changes. A bullish engulfing is always going to be looking like a bullish engulfing, no matter what you call it. It's still going to be looking at it's still going to be the same. Yes, you need a foundation before. Let's see. Would you suggest price action to be the first strategy a beginner needs to learn, considering there's just many strategies out there? So what you need to learn is, there's a site called babypips.com. Babypips.com has a very good free Forex education course where you learn the basics of Forex trading and some of the very simplest stuff in technical analysis. And you have to understand basically what is a candlestick, how does the Forex market work, what is market structure, what's a trend, higher highs and higher lows, what's that, horizontal support and resistance. You're probably going to be learning a different patterns, how to use a trend line, how to add horizontal levels, those sort of basic fundamental things. It's like if you want to become a doctor, you might want to be learning something about medicine. You might want to be going like a introductory course into the art of medicine before you think about becoming a doctor. And it's kind of like the same thing in trading. You probably need to understand the basics of technical analysis before you can go and think they're going to be a professional trader using technical analysis. It's kind of like that. Build a solid foundation with the foundational tool in trading, in technical analysis. That's what I would be recommending. Okay. Yeah, baby pips is a really good starting point. What do I trade mostly? Well, I think we're going to be looking at that in a moment when we go into my trading system. But just quickly break this down. You add the 20 EMA or whatever EMA, and then you want to be looking at a rejection at this, just like you looked at a um, uh, horizontal. You got that one right there, and then you get this one right here, and then you're going to be selling, selling based on that. And I also, one note that I want you guys to understand, that a lot of times when I'm on these live streams with Victor and Saul and others, I usually trade EU on like the 1 minute, but that's not my main type of trading. The reason why I do that is to give you guys some interesting content, and also see if I'm doing an experiment where I basically say, I wonder if I can just trade purely discretionary on the 1 minute here live on the trading room, and actually see if I can be profitable and actually develop something live. That's what I'm doing, but that's not my main type of trading. Those trades are on an evaluation account, and not my main account or my personal account. My personal account and my main funded account, I'm taking 2 to 5, maybe 6 trades a week, which is most of the time outside of the live trading room. What do I think about binary options? I have no idea about that. Like, I have no options. I have no ideas. I'm not the right person to ask that. So what I'm going to do, guys, is I'm going to take a quick break. And then when we are back, I will be doing the second giveaway, and then we're going to be looking at my trading journal, and I'm going to be talking about some of my past trades, and I'm going to be showing you some ideas I have for potentially improve my system. So see you guys in 10 minutes. And while you're waiting, make sure that you just spam the comment section with as many questions as you have around what we talked about today, so I can go through it when I'm back. Okay, see you in 10 minutes. I am back a little bit earlier. I'm just sitting here, just watching the timer go down. I'm like, what am I doing? Let's go live instead. All right. Do we have any interesting? Like I went upstairs and my fiance is like, what do you sound weird? I'm like, what do you mean? And I'm kind of losing my voice. It's insane. Like I'm just been talking nonstop for an hour. I'm looking at the time. I'm like, oh man, I got such a good flow here. Maybe the live stream is over soon. And it's like, oh, I got an hour left. Yeah, I gotta save that voice. Okay. Let's do the next giveaway. See if we have. I can change. Look at the screen behind me. That is beautiful. Man, I can just sit here for hours just watching that. Okay, live draw. Let's do it. Can we get a drum roll? Let's see. Let's see. Al Brooks price action series. Al Brooks. I gotta Google that. I do recognize that. Oh yeah. That's yeah, that's some good stuff. I'm pretty sure that I think he's is he CMT? I remember reading about him in the CMT book. I think I might be completely wrong though. Okay, do I have a drum roll? Let's see. Let's do this one. Alex's favorite. All right, there we go. It's super loud. Yep, it's time. Let's go. One winner. Risquita. Risquita P. Congratulations, you've just won something. I haven't even announced what you guys are winning. It's going to be interesting. I actually no, so it's the same thing as always. No surprise, guys. I'm sorry, but I really hope that soon I'm able to give away merchandise. That would be really cool. Like I want to have a hoodie that's like, this hoodie is not supposed to be bought, like be able to be bought online. Like it's only going to be able to like be given away during these live streams, and it's going to be like a uh trading room exclusive hoodie, like, and then we would have different tiers, like one hoodie that's only for the live stream, maybe one for Discord, and will be like on like VIP stuff, right? So it's going to be, you know if we give away 10, then it's only going to be 10 of these in existence, right? Which I think is going to be really, really cool. So that's something I'm trying to get Saul's approval for. Well, I think he's going to do it. It's just a question of logistics and getting it all set up. But when that's done, I did. Well, how it is in business. Things are not always moving in a straight line. you know. But yeah, we're definitely working on setting something like that up for you guys. What am I even doing with this screen and everything? All right, there we go. I've been doing this for like forever, and I still not used to the controls. Okay, so what are we supposed to be doing today? Well, I'm going to be showing you my trading journal, the trading journal that I've added the Are you in Australia? Maybe you are, because you said good morning at a time where I'm like, what is this person doing is waking up? Let's present something. We're going to do screen sharing. We're going to be doing the Edwong Trading Journal. All right, Henry. I thought, for some reason, I thought that you were from like Belgium. Like I read your name and it's like, that guy's going to be from Belgium. But you're from Australia. I don't know why I thought you were from Belgium. Hmm. Well, okay. So this is my Edgewonk journal right here, and you can see that how much data do we have? We have this journal going back not a lot, but from the 10th of the date that says right here is July. We have 32 trades. Win rate is about 72%. And I'm at a return of 1.90. Oh, really? So you're from that's crazy though. Like it's actually um, not far, not far. Okay, interesting. So yeah, as you can see right here, returns are not great. I mean, the R multiple here almost 4. I'm happy with the risk the return of risk in terms of R here. I'm happy with that. But when it comes to percentage, making 2% since July, basically two months making 2%, 1% a month, it's still profitable. Okay, it's still profitable, but I would like to have that double. I would like to have it like I would like to make at least 2% a month. I would be happy with that, right? So what I did here in the beginning was we can look at the money, the return of each trade, and you can see that should be getting higher and higher. So on the winners here, we have a 280 winner, 400, 400, 400. So here it seems like my profit target here is around 400. Okay, so we go to the next month. Here I have one winner that's almost 700. And then you go to where we are currently, one winner here with 500. So it seems like with time, obviously, I'm increasing risk. So now I'm at a point where I'm risking 1.5% of my account on each trade, which obviously that would be giving me more return. Paul Brown says, "Have you ever traded Bitcoin?" Yeah, I think you would be surprised to know that I'm. Did you guys see that? Aliens are visiting. That's what happens. That's what happens before they come. It's everything starts glitching out and goes black. Anyway, yes, I do trade Bitcoin quite a lot. My first investment was in Bitcoin. I started trading Bitcoin. Like I'm at core a altcoin and Bitcoin trader, but it just sucks. Sucks. I don't like Bitcoin. Forex is much more consistent. So yeah, so let's go through some stuff here in the journal. So what I'm what I think one of the coolest thing here with a trading journal like this, what you can do is can go into one trade here and this is a good question. What is life like as a trader with children? So I think one of the things that I'm really really grateful for is so let me give you guys an example. Okay, so this Monday I had an appointment at the hospital with my son in like a regular checkup, right? And that was around the time of the giveaway. So I mean around the time of the live stream. So told Victor, I'm gonna be gone. It's better, I'm gonna be gone. You'll be trading with Rich instead of me. But what I did was I was able to bring my laptop with me, and so we had an hour or so to kill, and I had my laptop with me, and we went to this park. So my son was playing for like an hour, and I was sitting with my laptop, and I was trading and doing my regular trading routine on my laptop in the park. I connected my my phone's Wi-Fi to the laptop, and I'm just watching my son play. And it's like I had this feeling of like just feeling just completely blessed of the life that I've been able to build, because I started trading when my son was born, and he's soon he's about to turn 7. And this was my plan all along. I mean, the reason why I started trading was to because like I came from a background where I came from a poor background. Like we had no money growing up. It was quite a struggle. And then before I started trading, I never really had a proper job. To be honest with you guys, I didn't really have the best life. Like I was just this um, degenerate drug addict slash criminal who was just living a terrible life. And then in 2015, I got sober. In 2017, I started trading, and I got obsessed with the idea of being able to build my own freedom and build my own future for myself and my family. And today I'm here at home with my own office. And I remember we were a group of friends in 2017 that started investing in Bitcoin, and we had these dreams. I think we were like uh, yeah, 4 people, and we all had these dreams. Like, you know what, we're gonna have this office, we're gonna be trading together, we're gonna be having, all of that, right? Um, and here I am. I got my office, I got my trading desk. I'm working with the 5ers. I'm working as a trader. I'm a professional. It's amazing. So I think that is one of the biggest things when it comes to being a trader and having kids. It's not the fact that sometimes it's going to be a struggle, you know. Sometimes it's it's a struggle when the kids, you know, when the kids are at home. Maybe they're home sick or something, and my fiance is working outside the home, so it's obviously easier for me to stay at home with the kids sometimes, right? And that can be a struggle. But if we're talking about only trading here, I'm swing trading. I'm spending 1 hour on Sunday perhaps, and then 15 to 30 minutes a day. So I got all of this time. So being home with the kids is actually a blessing, because I'm able to make money while I watch my kid grow up, and I'm able to take care of him while actually making money. And I think that's what life is all about. It's we have a limited amount of time, and trading for me is not just about making money. It's about making time. Okay. I think that's the true beauty of trading, basically. Your the possibility of just making your own time. Okay. Back to what I talked about here. In trading, in Edgewonk, you have something called OTP hit. That's the original take profit. If you if you exit early, but then after you exit, you see that your God damn. If you exit early and then you see later that your TP got hit, you press yes. Oh, you know what? Let me tell you another story. And this is okay. Let me tell you another story. I recently also got interviewed for this story to be published in a book. But yeah, so back in the day, way back, I think it's 2012. Um, there's this marketplace. I'm not gonna name names. The marketplace does not exist anymore, but it was run on Bitcoin. And to get into that marketplace and actually get stuff from that marketplace, you had to use Bitcoin. And so I'm like, oh, okay, gonna buy some Bitcoins. I bought some Bitcoin, went into that marketplace, and kind of like started getting interested in Bitcoin and reading about it, reading a little bit about it, and realized that I was able to mine Bitcoin and basically making money by having a program running on my computer. At the time, I made no money mining Bitcoin, but I did keep that laptop running, mining Bitcoin, and I'm like, well, this might be worth something in the future, you know. So I printed out a paper wallet. And I put that paper wallet, that piece of paper, into my drawer. And I'm not supposed. Maybe I'm not. Okay, I'm maybe not supposed to tell this, but I'm going to tell it anyway. So back in the day when I was partying a lot, my friends were partying a lot, and they needed a piece of paper to roll a filter. And I told them, "Oh, there's a piece of paper in the drawer. You'll take that, right?" So yeah, okay. So years go by, maybe months go by, and I moved. Okay. And in 2017, I got introduced to Bitcoin once again. I'm like, yeah, I heard about Bitcoin, you know. So this is 5 years in the future. I'm like, I heard about Bitcoin. It's like how much it is, like $1 or something, like $10 or something. And my coworker said like, no, it's actually $6,000. I'm like, wait a minute, what are you saying? You know, $6,000. So what I had on that paper wallet that's worth like $80 or something. It's now millions, you know, millions. So I go a bit, I get a little bit of a panic attack, and I'm like, I gotta find that paper. I turned my place upside down, even though I moved like 6 times after that. I turned my place upside down looking for that paper wallet, and I realized that that's basically what it is. It's the story of the world's most expensive blunt. I lost several. I think I have maybe 300 Bitcoins on there. We can do the math. What's current price of Bitcoin? Around 60,000. 60,000 times 300. Yeah, so that's 18 million USD. Yep. I lost 18 million USD. 18 million US dollars. It took me a while to recover from that. It is what it is, but that's what happens. That's the world of Bitcoin. It's absolutely insane. Anyway, what I wanted to show you here with the OTP, with the original take profit getting hit or not, what you can do if you put in the OTP for all of these trades in you, I mean, I didn't miss out on it, but still, yeah, this is also crazy. You know, the guy who, you know, the hard drive, and he's like paying the councils. Yeah, it's insane. We can go into advanced journaling here. No, we cannot. We go to strategy labs. No, it's not the right one. It's this chart lab. So if you go to chart lab, you can go and you can click trade management. Okay, so now what Wonk does here is it confirms or it compares my original TP or my exit price with the original TP. So basically, my trading is compared to a set and forget approach. And of course, the set and forget approach is TP actually hitting. And what you can see here is the blue line represents my actual performance. This is my actual performance, and it's not bad. But what the green line represents is my potential performance. So this tells me right here, and this is why you guys need a trading journal, because in that trading journal, you'll be able to see things like this and then know what to do. So when I added all of this, because I had 30 trades, and when I reached 30 trades, that was my threshold for starting to gather statistics. And I now see that, okay, I should not be managing my trades. However, you see at this point right here, there's definitely a difference here. You see that my management effect is quite good here, but then it starts to catch up. And long term, I suspect that it's better to just set and forget. Another thing I wanted to show you is, and this is another thing on how to, start developing your system. And you can look at right here. You have, if you go to journal again, if I go into setup and I go into advanced trade here, you have the highest and lowest price. Now this is, doesn't matter if you go long or short. You put in the highest and the lowest price right here, and that's going to give you access to this graph, which is exit analysis. And this is seriously powerful stuff right here. What you're seeing right here is the top line is the green line, and the bottom line, yeah, of course it's the green line. The top green line, that's the TP level, and the top red line, that's the stop loss level. And the red bars represent how far down, how close price came to my stop loss, and the green line or the green bar represents how close price came to my TP. And the red or the black dots represents where I exited the trade. You can see here that you can see right here, some of my losses I've actually exited in a good position, because you can see here that one hit stop loss and I let it hit stop loss. Then the next one hit stop loss and I let it hit that stop loss as well. The third one that hit stop loss, I actually exited before price hits that stop loss. So that's a good exit right there. And then you have another one right here where I exit before I hit stop loss, and then another one where I exited before I hit stop loss. That's 1, 2, 3 trades that was I exited halfway to stop loss that would have hit that stop loss. Okay. Now, if you look at the winners, however, you see that there's way more winners I've exited too early. So by the looks of this, you can see in 19. Yeah, I don't know what's up with this one. We can go in and actually look at that one. I don't know there's probably something wrong with the numbers I put in here. So yeah, there's something wrong with the numbers here. But what's interesting is I exit at the very low. I exit at the very low, and then it went almost up to TP. This is weird though, because one of them has to hit. Either TP or stop loss has to hit. I have to look at the statistics of this trade. There's something wrong with this. I probably made a human error here. But we can look at the winners here. Yeah. We can do a quick calculation on this. I'm going to be copying this graph here. Then I'm going to be moving this over to TradingView. And we'll be doing some we'll be breaking this down. What I want to do now is I want to calculate the losses. I just want to make sure that it's a clean shot here. Okay. So we're going to be calculating the losses. And the way I'm going to be calculating this is, what if I use a set and forget approach here? We know that stop loss is 1R. TP is 0.5R. We're going to be accumulating the trades where we did hit stop loss. And you see, there's a lot of these trades here I've exited in good profit, and then it went straight down to stop loss. And this one, I exited that profit before going down to stop loss. But I think that's actually only once. So if I apply a set and forget approach on this one, combining all the trades that hit stop loss and then combining all the trades that hit TP, what would be the result if I kept my trade and just kept my trade open after entering the trade? And then I can compare this with the trade management chart, and that will give me an interesting picture. So let me see first, how many trades do we have that hit stop loss? We have 1, 2, 3, 4, 5, 6, 7, 8, and 9. Okay, so that's minus 9R. We have 9 trades hitting that original stop loss. So the result of that would be minus 9R. And now we're going to be doing, because TP up here is 0.5R. So we do 0.5 times the number of times that original TP got hit. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. I'm going to do that one as well because it's so close. 18, 19, 20, 21, 22. So 0.5 times 22. So we have 22 winners. Thank you, Alex, for counting with me. We have 22 winners, resulting in 11R. And then we do 11 minus 9 equals, let's see, yeah, it's 2, right? 11 minus 9 is 2. So it should be 2R. So the result of this is 2R, which really makes me think. It really makes me think here, because that it makes no sense, right? It makes no sense. Because if we go back to the trade management chart, we first look at the actual return in R for this journal is 4. Okay. No, I actually did not count the early close trade, because if it's not hitting TP, then it's gonna hit stop loss. But see, let's go back. This one, I mean, this one hit neither TP or stop loss. So there could be, obviously, there's some, this one I need to look into. That should probably be a winner as well, but that's only going to be, that's going to be 2.5R. And looking at the journal, it's actually 3R in profits. What I have to do is, if I go back to, I see that when I go through my journal, one trade, I've actually taken some of the trades here are actually bigger than half an hour. One trade on gold is actually 1.33. So that would mean that one of these winners are 1R bigger. So we would land at 3R. And then I have some trades, which is one trade, which is 0.9. So on that one, we can add 0.4. So now we're at 3.4R. And then I have a few trades, which is 0.6. So we can add 0.1, 0.2, 0.3, 0.4 to this, which means then that would be 3.8. So now it starts to make a bit more sense when you look at that. So it's not really, this is not the complete picture, because we don't know how many R did we make on that trade, you know? So the best way to look at it is to look at the trade management. But by going through this, I now have an idea that by using a set and forget approach, where basically I let either TP or stop loss get hit, I am still profitable. Okay. So what that means is 3.8R. And if I'm risking 1.5% on each trade and my TP is half an R, we'll take 1.5, divide that by 2, and we have risk, or our R is 0.75%. And we then take 0.75 times 3.8, which means the result is now going to be 2.85, which is quite good for doing almost nothing. Okay, so by using a set and forget approach and risking 1.5% per trade on this strategy, I would have slightly under 3% profit. And looking at the trading journal right now, I'm at 2% profit, but I'm actually around the same risk to reward. So I think what I have to rely on is this trade management chart, because we can look at this. I think this is a better metric to track. Because here we clearly see that the actual performance is, let's say 4R, okay, 3.97. So let's say the actual performance is 4R, okay? The potential performance is slightly under 7R. And my trade management has cost me 3R, which is almost half of the profits, which is, there's a huge difference. But what I also have to look at here is what happened, what happened here. Let's see if I can draw. I want to make sure that I understand. Why is this not working? Yeah, so as you can see, trading is, it's all about looking at your statistics and looking at these graphs and then asking questions and trying to find answer to those questions, because the orange, or yellow. It's yellow, orange, whatever color that is. This line right here, it starts going flat right here, and then it takes a dip, and then it starts trading lower. So at a certain time, I started managing my risk maybe a bit too much. And we can look at. I'm just gonna go into MetaTrader here quickly and transfer over the latest trades to Wonk. And then you'll probably see that Wonk pops up shortly. If you go to the journal, we can have that latest trade right here. So this is the trade right here. This is NCD CAD. I'm gonna be adding entry comments here according to plan. And then I'm going to be selecting yes on the OTP hit. Remember, that's the trade I showed you at the very beginning of the live streaming session. Trade I took on NCD CAD. Now you can see. I'm gonna have to share trading view here again to kind of show you the actual trade. So you can see here that this is also one thing that I'm in the work of testing. You can see here that I took profit at 0.55 R, but I could have easily gotten 1 R on this one. So what I've done with Wonk is also I've compared what's the best approach, exiting at half an R or exiting at 1 R. And I'll show you the results of that shortly as well. And then after that, we'll go into the we'll do the last giveaway before we wrap this up. Where is right here? Okay, so what I do is I always add the daily screenshot, and then below I also add the 4-hour screenshot of the trade, so I can then actually look at all my trades and see how they looked from a technical perspective. And then I'm going to be adding the highest price. So the lowest price, because this is an actual short, the lowest price is going to be my TP price. And if original TP gets hit, I'm just going to be selecting the exit price here, move that to the lowest price. And then we're going to be looking at the highest price. And that is obviously how far up did price go after I entered the trade, which is going to be 83684. 83684. Okay, so now we have the highest price and the lowest price, and TP1 got hit, and I mark this as according to plan. What we can do now is we can, and here it says that I made 0.46 and not 0.55 because I mark it entered, and there's of course slippage. Yes, that screen in the back is PC monitor, and it's actually quite small. It looks big, but it's actually quite small. So now that we have that one, we can go back and we can look at exit analysis. Yes, this is a journaling app, and it's called Wonk, and it's really good. Now we can look at that. We have a new graph right here, which is that one right there. And this tells me that it did not go against us very much, and it did hit TP. So what happened? The thing here is, if I see that most of the trades do not go against me a lot, then I can limit my stop loss. So right here you have the minus 50%. So this means if the trade goes 50% against my position, And if I see that most of the trades are above that 50% line, that means, and you can have this, right? Most of the trades are above the 50% line. And if they cross the 50% line, they'll hit your stop loss. What that means is I can cut my, I can, cut my stop loss in half, actually doubling the profits of the trade. And same thing here. If I see that a lot of my trades are not running to TP, but instead they reverse around the 50% and then hit stop loss, what I do then is I know that I can I can move my TP down because price are just moving 50% to my TP and then stop loss. Well, if I move my TP down 50%, that means all of those trades are going to hit TP. So this is a great way to look at that. And now, because we have one more trade where I used a set and forget approach, I can look at trade management. And now, as you can see, even better. Actual performance 4.43R, So now you can see that potential performance and the actual performance, because this is the last trade. Now the actual performance and the potential performance is following each other right here. And now we can go to journal and we can say, okay, so return here is 2.64 on this account now. My R multiple, I've made 4.43R. We can look at the equity graph. This is what the equity graph looks like right now. What I like about Wonk is we can also add something called the tilt meter. And this shows us basically my tilt meter is if a trade is according to plan, it adds positive to my tilt meter, means that the tilt meter goes up. And if I start making bad decisions, the tilt meter goes down. And we can see here that the tilt meter is following the equity curve. So every time that's the green bars. Every time the tilt meter goes higher, that means I made good decisions, because I basically mark out two things. Is the trade according to plan or not according to plan? If I mark a trade as according to plan, then a tilt meter is green. If I mark it as not according to plan, then I get minus on my tilt meter. And you can see here I took a trade that's not according to plan. What happens? Tilt meter goes down. Here, tilt meter goes up. What happens here? Sideways price action, but then eventually up. Small dip in tilt meter, small dip in equity curve. Dip in tilt meter, dip in equity curve. This means that the equity graph is following my tilt meter, which is a very good thing, because if I stop taking trades that are not according to plan, it means I would be much more profitable. And here's another thing I want to show you with that. If we go into trade analytics and I add, let's see, I add entry. If I go in here and add entry comment, okay, that's the comment that decides my tilt. I have two that are not set. Okay, so let's ignore that. I don't know, I forgot to add that. But what can we see here? We can see not according to plan, according to plan, and not according to plan. I have 20 trades. I have 20 trades according to plan and 11 not according to plan. This is insane, okay? What is the win rate of the trades that are according to plan? 85%. 85%. So if I would only take trades that are according to plan, I would have an 85% win rate. And we can look at the sum R multiple. I would have been up 6R and not 4R. And I would have made in, let's see, in percentage, I would have been up 5%. And now we start talking about what I want from this system. This is the statistics I want to see. High win rate, high return. So on these 2 months, I would have been up 2.5% a month. And that's where I want to be to actually make a good living from trading. Okay. Trading is in the description, is 5ers Live. That's the code. Okay, this is a really good question. I've been waiting for this. What does this what does it mean a trade according to plan? Let me show you. We also have basic filters here, so we can look at we can look at the same thing here with the filters. So we can look at entry comment according to plan. These are all the trades marked as according to plan. No, I don't know a lot of traders who switched from Forex to industries. But obviously, you can look at the equity graph here. This is the equity graph of taking trades that are only according to plan, which to me, this is just absolutely insane. But the thing is, we're always going to make mistakes. We're always going to be taking trades that are not according to plan. The question is, how can we make sure that we don't take a lot of trades that are not according to plan? But we'll see. Okay, so, and of course, some of these winners are also going to be, some of the good trades are going to be bad trades as well. Like some of the winners are going to be bad trades. But what is a trade that is according to plan? Well, let us take a look at NCD CAD, the most previous trade right here. This is a trade that is according to plan. Why is it according to plan? Well, as you can see on this screenshot right here, we have a key level. We broke that level to the downside, retested that level from the downside. We broke it to the downside and then retested the level from below. And that's where I had a break and retest on the 4-hour, and I entered based on the 4-hour bearish engulfing candle and the break and retest with the daily bias. That's a trade that's according to plan. There's no question about it. This is the trade. This is the system. This trade is according to plan. Now let's take a look at a trade that is not according to plan. This is AUD NCD. And yeah, it's basically, I'm going into advanced trade details and I'm adding a comment. I'm adding either according to plan or not according to plan. So if I take a trade where after the fact I go through it and I'm like, yeah, this is actually not the type of trade that I want to be taken. This is not in my system. This is a impulsive trade, or this is a trade taken based on, maybe I took the trade while breaking rules. Maybe I took the trade and I have a rule that says only 2 trades per day, and this is the 3rd trade, and that's not according to plan. Maybe I'm tired and I'm not supposed to be trading. Well, that's not according to plan. If I wake up and say, you know what, today I'm not going to be trading, I take a trade anyway, that's not according to plan. But most of all, yeah, tail trades as well. But most of all, you have to look at the technicals, okay? So if the trade aligns with the technicals, that's most of the time according to plan. If it doesn't align with the technicals, then a lot of times it's not according to plan. So we can look at this trade right here. This is marked as not according to plan, and this is on AUD NCD, and this is from 2 days ago. And we can look at this one right here. This is on the 4-hour. Okay, so why is this trade not according to plan? I have to go into AUD NCD on TradingView to actually break this down. And one thing that's super important is I have a folder here on the object tree, and all the trades and all the drawings for all my trades pop up when I click that one, because I have it in the same folder. So you can see that all my previous trades and all the levels according to that, that goes with those trades is in that folder. So whenever I have to look at a past trade, I just press that one and then it comes up here. Yes, exactly. I'm the one who puts that in. Okay, so why is this trade not according to plan? Yeah, I know exactly why it's not according to plan. Let me show you why it's not according to plan. Because you see this on the daily here. The whole idea with this trade was based on the fact that we had a bullish engulfing candle here. So that bullish engulfing candle told me that, all right, I want to go long. So I went into the 4 hour, and the 4 hour, I saw a sort of like a break and retest of this level right here. But what I also see is it's not really super clean, because it's a high here, and then it's a lower high and a lower high, and actually kind of makes sense. It actually kind of makes sense. But I think one of the reason why, yeah, no, so this is why it's not according to plan. Because down here is, and I exited here, and I said that entry orders, yeah, exactly. This is why the trade is not according to plan. I'm sorry, guys. I'm a bit, sometimes you have to go through it. So I entered based on that candle. And the reason why this is not according to plan is because that's the level where I should have entered, okay? So I should have put my, let me just move this down here, and I'll put another one on. So this is where I entered. Stops here, and then TP at 0.5R. That's the idea, right? And now you'll see how this turns out. Comes down, hits my stop loss. But what if I did what I'm supposed to be doing? And that's, yes, exactly, this is FOMO. Enter on that level right here. Okay, enter on that level right there, stops at that high, and now I can move my stop down so that it becomes 0.5R, and now I can have a much wider stop loss. Look at that. I can now have my stop loss all the way down below here. And that's the plan. And what would have happened if I followed my initial plan? Yeah, this would have happened. And this is why trading is difficult. That's insanely frustrating. But yeah, this is the trade, and that would have been the plan. You see, we talk also about clean levels. Look at that. We have a breakout here on the 4 hour. We can go into even the 1 hour. Look at that clean level right there. What if we enter on that one, stop loss below here, and then TP at 0.53? It's going to look like this. We get filled on that move down, and then straight up to TP. So the mistake here was with execution. I basically entered the trade too early. And that's why it's not according to plan. Another good thing then that we can do is we can go into Wonk, and we can start tracking early entries. Okay. So on this one right here, I can go into advanced trades, and I have custom statistics. This is the entry triggers right here, but I can go into settings and custom statistics, and I can add what should I name this? Yeah, you know what? I don't know, but I'm just going to name it custom stat too. But what I can do is I can add here, I can add early entry. To the early entry, maybe FOMO, because usually when I do an early entry, it's going to be based on FOMO. So we can do early entry, and then I can add here early exit. If I exit for some reason before stop loss or TP getting hit, I'm going to mark that one out. So now we can go back to journal. You can add on ADNCD, go into advanced trades. custom stat 2, I'm going to be entering early entry. Then I can track that. I can go into advanced filters here and track all the trades where I've entered early. How profitable is it? Well, obviously, it's not going to be very profitable. One last thing before I do the giveaway is I wanted to show you another really, really cool tool with Wonk. That is the alternative strategies. And here I'm comparing half an R or 0.5 R exit with 1 R exit. You can see here that first what I do is I go into the journal, and you can have a trade like NCD CAD. Okay, so I'm going to be selecting the 5R setup because this the half an R setup because this is a 0.5R setup. Click that one, and now you see I get a pop up. It pops up alternative strategies here. So I'm going to be putting in what R would I do? Did this trade hit 1 RTP? And yes, it did. I've showed you earlier it did. So 1 R, and then I can go here and can say, so that's half an R. I'm just going to take that one. And usually what I do is I use ChatGPT for most of this. Also, I ask ChatGPT and I ask him if so this is a 0.46 R trade, and I say if 0.46 R is 705 in profit, how much is 1 R? And then that's going to give me an answer. But just for this example, I'm just going to have 705 times 2, and it's about 1,400. So I would have made 1,400 on this trade right here. Saving that one, and now I'm going back to alternative strategies, and I would go in here and we look at and now we can look at the difference between 1 RTP and half an RTP. And what you see here is actually the alternative profit just went past the went past. So right now with the and then I have a few more trades I got to put in. Right now it actually looks like 1 R, and the 1 R approach is more profitable, which is very, very, very interesting. That's definitely something I need to look into, and that's quite a big difference as well here in terms of risk to reward. So yeah, there you have it. Like this is how I developed the system. If I see that, add a couple of more trades, maybe add 20 more trades, and I see that, wait a minute, 1 R taking profits at 1 R is actually more profitable, then yeah, I'm gonna switch to 1 R. I'll have to follow the statistic. Yeah, the drawdown is much less with half an hour, and I think that's what I like as well. The win rate is higher and the drawdown is lower. All right, guys, I'm gonna be doing the last drawdown here now. Did I say the last drawdown? I'm gonna be doing the last giveaway, and then after that we're done. And well over 2 hours now. So I would like to thank you all for joining here today. And if you like these live streams, let me know in the comments. If you want more live streams like this one, where I break down my own system, a couple of ideas for system, also go through my trading with the trading journal, let me know in the comments. And if you want more content like this one for me, also make sure you follow me on Twitter. Right? You can just Google my name and you'll find out. All right, guys. Thank you all, and congrats to Superstar for today's last giveaway. And I'll see you all on Monday. Have a great rest of your week and a great weekend. Take care, everyone.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers.